In this chapter, we're going to talk about how much capital you need to start your trading business properly. One of the biggest issues for new traders is undercapitalization. I find that often we will take more trades than we actually should when we are undercapitalized. And overtrading is the number one reason people fail at trading. They just take too many trades. As I've said already today, they think that they have to be right more than they focus on actually making money, which means taking the highest probability trades and avoiding losses, not taking every trade idea that you have. So first, when we talk about funding your account, I want to get into some expectations that you should have for yourself, but let's talk about this first. So there's really just two options. You can either become a self-funded trader, which was the route that I had to take because when I got started trading, option number two wasn't even an option for me. Option number two is a prop firm, one of these funding companies. As you've probably seen them, they're all over the internet, and they aren't just for Forex traders. There's funding companies in stocks and options and futures. Money is very cheap, so to speak, nowadays. So it makes sense that there are a ton of these prop firms popping up that are offering funding to traders who can prove they are consistently profitable. A lot of these funding companies have challenges that you have to pass before you can get funded, but if you learn how to trade through the ASFX systems, and if you learn how to lay that foundation properly, you should have no issue passing the funding challenges that these prop firms set. We have many traders in ASFX right now today. We had a guy pass the challenge on Friday for one of the funding companies. Many traders in ASFX are using the systems in our beginner and advanced courses to pass these challenges and receive funding. Now, the beautiful thing about funding, simply put, is for me, as a self-funded trader, or for you if you're a self-funded trader, we have to generate the income, either through trading or through other means, to then fund that trading account. When we do that, it's a taxable event. Then, when we trade that money that was already taxed and we make a gain on it, we have to pay tax on that gains. So there's two taxable events in there. Versus, if you were to just trade with a prop firm, you could trade their capital, let's say $100,000. To get that $100,000, you didn't have to pay taxes on it. You only have to pay taxes on the profit splits that you get from these prop firms. So from a taxable event standpoint, it's much better for a new or struggling trader that is not self-funded and trying to decide which of these two paths to take. It's much smarter, in my opinion, to try out the prop firm. We know some of these prop firms are paying out profitable traders, and if you think you've got what it takes, not yet, but we're going to get you there after we work through the ASFX systems, then you should be able to pass the challenge and get funded and lower your taxable events completely. So that's really what I want you to understand here. And what it comes down to is, as I say at the bottom, big money makes big money, small money makes small money. The people who talk about taking a $1,000 account and flipping it into 20 grand in a week, they're over leveraging. They're trying to make small money make big money, and no one has built a successful and consistent business. The word consistent is important there. No one's ever built a consistent business in this trading industry off of flipping accounts with high leverage like that. The most consistent traders have a large amount of capital. They risk a relatively small percentage of that capital overall, and they're making more money than most people make in a month, in a year sometimes. So it's about having big money. So how can you get big money? That's really up to you. Some guys, literally, some of these guys that I work with in ASFX, they will get funded privately through family money, and they'll get funded with the prop firm, and they'll trade both accounts to have as much capital as possible. So it's really up to you, but those are the two paths that you should look to take, self-funding or with a prop firm. Now, as far as expectations, like I said, really, expectations are the death of every trader that doesn't make it. There's a book that I recommend you read. It's The 4 Agreements by Don Miguel Ruiz, and it's a book that is applicable to your trading, your everyday life, your relationships, business, everything. And one of the agreements that he says we have to make with ourselves and with the universe to live a good life and to be happy is that we cannot expect anything. No assumptions, no expectations. So with lofty expectations, we find that fast tracks traders to failure. Failure tends to creep in when expectations are not met. Frustration creeps in. That frustration is an emotion. If we are not aware of that emotion, remember awareness from the crash course? If we're not aware of that frustration, we'll let that frustration drive the decisions that we make, and that's not going to be profitable trading. So again, don't expect to make $100,000 this year if you're only trading a $5,000 account. To me, as I'm now 6, almost 7 years into my trading career, year 1 through 3, just survive and lose as little money as possible. Get educated. Find a system. If ASFX doesn't work for you, like I said before, I can't knock you for that. If you try it and it doesn't work and it doesn't align with your beliefs, that's fine. But we have over 1,500 global members as of me filming this And the number one reason that people don't make it with ASFX specifically is because they focus on trying to force their growth in the first year, two, maybe even year three, and that frustrates them and they burn out. So in year 1 through 3, I would really just say survive. Year 3 through 5, you'll know what you know, you'll know what you don't know, you'll find your groove, and that's where we can put the foot on the gas. But in year 1 through 3, demo trade your system, find winning systems, put a little bit of capital in, see how you trade a live account, maybe test out one of those prop firms, see if you pass the challenge. That's the path that you should go down later in your trading career. In the beginning, education, demo trading, making those stupid beginner mistakes right off the jump, getting them out of the way with fake money, preferably with the demo account, not with live capital. I remember no one told me to go down that path of using a demo account. I funded a live account, and instead of trading one lot, I traded 10 lots, and I knocked out like 25% of my first account. And I used to blow $100 accounts like it was nobody's business. I wish I could still find it. I was using an unregulated broker, which is stupid because you could not get money out from them and you can't sue them. So I highly recommend you use a regulated broker in your country. I was doing that, and I was funding it with small money, trying to flip $100 into $200 every day. That's not real trading. I only know that because I was that guy, and now I've overcome the issues that have led me to now being a successful, consistent trader with my own money on my own. So I think, again, year 1 through 3, survive, lose as little money as possible. Year 3 through 5, that's where you're going to be locked in. If you've made it that far, you probably have a system. We need to figure out maybe how you can follow the rules of that system a little bit better. But again, drop the expectations, focus on not losing a lot in the first couple of years. Find the system, practice it, get good at it, and then in the year 3, 4, 5, 6, 7, 10, 20, that's where we have foot on the gas, tunnel vision focused on what works for us. So now we're going to move into a very important chapter about proper position sizing.